Welcome to this latest session in the Singapore FinTech Festival. My name is James Crabtree from the Lee Kuan Yew School of Public Policy. I'm going to be your chair as we talk about the future of finance is green. I'm joined today from Ottawa by Mark Carney, former Governor of the Bank of England and now UN Special Envoy for Climate Action and advisor to the UK Prime Minister on climate finance. And Ravi Menon here in Singapore, who is the Managing Director of the Central Bank. So we're going to do this in a fireside chat format. So I'm just going to fire some questions at our two guests, and beginning with you, Mark. So you gave a speech recently, last month, in which you outlined a pretty comprehensive agenda for the role that private finance needs to play in the run-up to next year's UN Climate Change Summit in Glasgow. Can you give us a taste of that agenda and, in a sense, what you think the real challenge for private sector companies is as opposed to governments?
Yes. Well, first off, thank you, James, and thank you, Ravi, for having me. I wish I were there in Singapore for the FinTech Festival, but it's a great initiative and further evidence of MAS's leadership and Singapore's leadership in both of these subjects, in green finance and FinTech. And I think the great thing is they're coming together and mainstreaming. And maybe, James, to get to pick up on that point, which is that really is the objective for Glasgow on the private finance side, is to mainstream sustainable finance. And if I were to put it in one sentence, the objective is so that private finance, all private financial decisions, take climate change into account. Just as they take creditworthiness into account, they take interest rate risk into account, future technologies into account. Climate change is one of the determinants of risk and value. And so setting that as an objective, one works backwards and thinks about, well, what's required in order for that to be the case? What's the information, the tools, and the markets that are necessary so the private sector can do its job in terms of allocating capital, managing risk, and seizing opportunity? And the way we've grouped it for the strategy is around 3 R's and an M. The first R is climate reporting, based off of the TCFD, and the objective is ambitious. We want to have pathways to mandatory climate disclosure. And the good news is there are a variety of ways that can happen, whether it's through the IFRS's initiative around sustainability reporting, national initiatives with legislation initiatives at the European level, or through regulators and supervisors as well. But basically, we want to move to a system pretty quickly where climate reporting is comprehensive, consistent across jurisdictions. Investors have the information. Secondly, we need to be better risk managers around climate risk. I'm sure we'll dive into that, but one of the challenges is past is not prologue with climate, and so it is more difficult to manage those risks. And it's not just about the physical risks; it's about the success of climate policies, actually, and so-called transition risk activities that are economic in the short term, but not economic in a truly sustainable sense, and that will become more obvious. The third area is around returns and how capital is allocated, what are the tools for capital allocation, and also how do pools of capital, whether they're large pension funds or asset managers or anyone in between, how do they relate to their clients, all of us, all of our savings, how well those savings are positioned along the transition towards net zero? That's an easy question to ask. It's a harder one to answer, and we're working with the industry to get those answers. And then the last issue, which is I know an area where Ravi and Mas have done a lot of work, is around carbon offset markets and nature-based solutions. And these markets are small, they're fragmented at present. There is some concerns of greenwashing in them, and they need to be professionalized. These are markets that currently are measured in the hundreds of millions of dollars and should be in the tens of billions of dollars. In fact, probably around 100 billion per annum in size. And so we're working to develop the architecture for that. Bill Winters, the CEO of Standard Chartered, is leading a very large task force on this, and the first report has come out. So all of those building blocks are being put in place. The great thing about having a deadline, having Glasgow in less than 12 months, is we know what we have to work to, and we're working with international partners in the private and public sector, and with the best thinkers, including Ravi.
Just before I turn to Ravi, this book from Singapore. Just give us a sense of how big a lift this is going to be. In the speech, you talked about the fact that we have now leading companies who are committing to net zero in various different ways over a particular period of time. But how far behind target are we, and how much of a big push does this require?
Well, it's suffice to say, a few years ago, I'll try and think of the polite way to say it. It was on the periphery, or only leading edge companies and banks and pools of capital really systematically looked at climate risk. Now this is mainstreaming, and it's mainstreaming very rapidly. And I think the important thing is that it mainstreams at a very high standard. So we're in a position now where, for example, if I total up all the balance sheet that wants climate disclosure across pension funds, sovereign wealth funds, asset managers, banks, it's now $170 trillion that's demanding this climate disclosure. So that shows how much the industry has moved. Now, that climate disclosure only came out, the TCFD recommendations under Mike Bloomberg's leadership only came out 3 years ago. So you move from a standing start then to where we are now. But I think, as we all know with climate, we don't have a lot of time. And so while tremendous progress has been made, we need to keep up that momentum and keep that trajectory going.
Ravi, the same question to you, which is, in a sense, how does this look from your patch in Singapore? I mean, how is MAS working with the private sector in this part of the world to try and meet these kind of targets that Governor Carney is talking about?
Well, thanks, James, and thanks for doing this. And also want to thank Mark for joining us for the FinTech Festival. Great to have you. Well, I wish I was doing Mark's job with a singular focus on sustainability, but unfortunately, we're also faced with a huge pandemic and economic crisis. And so, at the MAS and in Singapore, we first have to deal with the COVID-19 situation with very unconventional responses to support people and businesses. And of course, our core functions of maintaining monetary and financial stability takes up a lot of our resources. But I'm happy to say that while we are at those two as well, we managed to find the bandwidth to press on with our forward-looking agenda to emerge stronger and in a better place after the crisis. And we, for the MAS, three priorities basically for the long term, which is upskilling the workforce for inclusive growth, 2, digitalization and harnessing of technology, and 3, sustainability, harnessing the power of finance to help Asia green and move towards a lower carbon future. I've been pleasantly surprised that the momentum on sustainability on the whole has remained very strong. And I think Mark has spoken to this as well. I'm just also very heartened that, despite the challenges we're facing on the pandemic and economic fronts, I think this year we've seen more pledges for carbon neutrality and zero by both corporates and countries amidst all this. And I think it shows a certain seriousness of purpose and a realization that this is an issue we need to focus on and step up to. So likewise, I think I share Mark's views fully that the financial sector has a tremendously important role to play, simply because it provides money, be it through loans or through financing or for investments or through insurance. It can shape behavior. We've seen a tremendous growth in the issuance of green and sustainable bonds and loans first 3 quarters of this year, right through the pandemic. People took the trouble to do that. If I may just say, DBS Bank, for instance, launched the world's first, what they call the Sustainable Transition Finance Framework. I think transition finance is important in Asia, but not quite where Europe is. Pressing needs of economic development and very difficult trade-offs to make, fossil fuels of life. And so the challenge here in Asia is for transition financing. How can we move corporates and other entities towards cleaner and greener forms of energy and activities, and also to develop an appropriate taxonomy for this. DBS, I think, was also the first Asian bank to join the Global Renewable Energy Initiative, RE100, and committing to utilize 100% renewable energy in all its markets. There are lots of such examples. I could go on, and you see this happening in Asia, which you did not see, say, a year or two ago. On the MAS side, we've been making some progress since last year under what we call our Green Finance Action Plan, setting some clear targets and initiatives. We just launched the world's first green-linked loan grant scheme. Basically, provide a small amount of funding for corporates, especially small and medium enterprises, who want to obtain green and sustainable financing, but they need to engage independent service providers to validate the green and sustainability credentials of the loan and their activities. And so this grant, we're hoping to make it easier for them to offset these costs and source so-called green loans. This also helps the banks to develop very good sustainable lending frameworks, standard templates that they can apply to small and medium enterprises especially, and it's a lot easier for them. The other thing we did was to issue a set of guidelines on environmental risk management, and this we applied to all banks, insurance companies, and asset managers. A standard set of guidelines on environmental risk management. And we've been stepping up our supervisory engagements with the financial institutions. Building capability is very important. The capacity building efforts in environmental risk analysis. The guidelines go beyond just climate risk. It also covers biodiversity and other environmental risks, because we think these risks interact in ways sometimes that we don't fully understand. But it's good for financial institutions to be keenly aware of these interests. The Bank of England has led the way. They'll be doing the climate-related stress test, I think, in the coming year. We're going to follow suit. We've set a target 2 years. So we're stepping up with the banks to put in place mechanisms and capabilities and modeling techniques in order to do these stress tests in a meaningful way. There's going to be a lot of learning along this process. And the intention, at least for us in the MAS, is not to, have capital charges and so on attached to these results, but just to learn how this is done, how should we look at these risks and better understand them before we start taking other kinds of measures. The other thing we're doing is capability building and research. So we just set up the Singapore Green Finance Center. We need Asia-focused green finance research. As I said, in Asia, the challenge is transition. And we need training programs and modeling of climate risks in the region. And so collaboration between the Imperial College London Business School and the Singapore Management University. Quite excited by this. And they've got a good program bringing financial risk modeling together with a deep understanding of climate risks and environmental risks. So at the MAS end, we're doing our own bit. We need to practice what we preach. So we're going to start measuring our own carbon footprint, set some targets next year, and start disclosures. Disclosures, I fully agree with Mark, is the crux of the whole thing. If you don't measure and disclose, then all the other actions don't take place. So that's been our focus for this year and next year, and we want to get that off. I'll stop here.
Very good. So Ravi mentioned the pandemic, and I guess we have to deal with this head on. So Mark, let me ask this of you. This could go both ways, I suppose. On the one hand, the pandemic might focus the mind and make us realize that we all need to act together in the face of common threats. Or as Ravi slightly hinted at the beginning, it might be a gigantic distraction in which all the policymakers who should be thinking about this on the road to Glasgow are thinking about something else. How do you see it? I mean, will we come out ahead after the pandemic, or does it mean we're going to be racing to catch up?
Yeah, I think, and I think we saw it in or heard it in Ravi's answer. we're going to come out ahead. I think if you'd asked me the question back in March, I would have said on the one hand, on the other hand, and been unsure. But what this has happened is that at a high level, we've recognized the importance of resilience and sustainability, absolutely, in our economies. And of course, both of those go directly to climate. Secondly, there is a necessary strategic virtually every company has had to look at their strategy as a consequence of the pandemic, whether because they've relevered or because of the acceleration of everything digital, changes in supply chains, et cetera. They have had to relook at their strategy at a time when society is saying, put an emphasis on resilience and sustainability, put an emphasis on net zero. And the bringing together of those two aspects has meant a much greater focus on exactly what Ravi highlighted, which is the transition. And I really should emphasize this, which is in order to get to where we need to go, it's a whole economy transition. Of course, it would be ideal if we could just leapfrog directly to a green economy. But we need to take the industrial structure, the manufacturing structure, the service structure we have, and move it rapidly. And that's where finance really comes into play, because it's every decision, every loan decision, every investment decision that's necessary. So there has been an acceleration, James, I'm happy to say. And with this opportunity comes great responsibility to make sure we have the building blocks in place.
Ravi, I'm going to take it you probably agree with this, but maybe not. What's your sense?
No, I fully agree with that. And I think there is also, and you hear this in Asia quite often, the tensions between the needs for economic development to provide electricity to villages who still don't have it. And, burning coal is the easiest and most affordable way to do it when your budgets are stretched, especially during times like these. So the trade-offs are quite acute in this part of the world. And I also think, however, that if you look beyond the short term, there are huge growth opportunities in the transition to a more sustainable future. And so in Singapore, we're looking at how we can create new economic value, new kinds of investments, and jobs in what we would call a green economy. Lots of new infrastructure that needs to be built, which requires new kinds of expertise. And so I think there's a whole transition taking place. It's just like digitalization. So far, it has created more jobs than destroyed. At least that's been experienced. All the financial institutions here are employing more people right through the pandemic crisis because of the digital transformation journey. And likewise, now they are looking to employ more people to advance the green finance agenda. So I think there is a lot of scope here. For instance, greening out towns. That's one of the things that the Singapore government is doing, not the MAS, the Green Towns program, lowering energy consumption, recycling rainwater, cooling the ambient temperature through use of technologies. A lot of this creates new investment opportunities and new activities and new value. So decarbonization has short-term costs, but at medium term, not even long-term, but medium-term payoffs are good. And I think in this part of the world, because of what I said, the reality of dependence on fossil fuels, the kinds of technologies that we focus on also tend to be that into account. For instance, we're focused more on hydrogen, carbon capture, utilization and storage, and so on, to the extent that some of the countries here may be limited in the capacity to have renewable energy, for instance. And so, again, these are new areas, and the idea of a circular economy is important, where you can actually lower your carbon footprint, not just through technology and energy efficiency, but by recycling. And this is a very good value system to have as well. Singapore is the first country in the world to achieve what we call parity in the water sector. Almost every drop of used water is recycled. Drainage, catchment areas, and then that's filtered and recycled for use again. We're trying to do that with waste, sand, oil, and so on. Plastics, more challenging. But if we set our minds to it, this is a lot of new activity, employing people in new areas and new technologies. So I don't think the trade-offs are that sharp if you start taking a longer-term perspective.
Yeah.
I mean, Mark, do you want to come in on this question of the balance between the developed and the developing world as you try and push forward this agenda? I mean, I presume that there's a particular role to be played for multinationals, which tend to be headquartered in rich countries but operate in developing countries.
Yeah.
But in a sense, how do you see the different responsibilities between the advanced industrialized companies and those from the emerging world?
Okay, well, let me pick up a bit on what Ravi was just saying as well, which is, I mean, what comes through in those various initiatives is looking at at an ecosystem. The economy as a system, waste management as a system, recycling as a system. And to get to your question, how do we put together the global economy as a system and thinking about sustainability in a systemic way? Well, one of the ways you do it is for a large multinational corporation not to just disclose their so-called Scope 1 emissions, the emissions from their direct operations, and their Scope 2, which is the power used for their direct operations, but to think about Scope 3, so all the way up and down their supply chain, and value chain, indeed, all the way out to the customer, including the suppliers through. Now, once you do that, for many of these companies, you capture the globe effectively. You're touching on so many countries at one time and thinking about aligning the incentives across that value chain to reduce your carbon footprint, your GHG footprint. And that is very quickly becoming expected. I was going to say best practice, but expected of companies. So disclosure and management towards net zero of their Scope 3 emissions. And that's another change that's happened really only in the last year, 18 months. So that level of ambition, that's one way that we connect the advanced and the emerging and developing economies. And really it's about developing economies because emerging are moving rapidly. A second way is through these carbon offset markets. I mentioned at the outset, many of the most efficient, cheapest, best, and most impactful from a biodiversity perspective as well, nature-based solutions and carbon offsets will be found in developing economies. Now, there's a huge incentive as companies around the world start to move towards net zero. In the initial phases, they need to get the net. They're trying to reduce absolute emissions, and they must, but they also need to get the net, those offsets. And that preserves our carbon budget. It gives a huge incentive, if we structure this market correctly, it gives a huge incentive for them to invest in nature-based solutions, and also tipping the economics of conversion of, Ravi spoke a few minutes ago about coal and other fossil fuel-based energy sources, tipping the economics of that towards renewables even further. So that's a second way we can do it. The third way we can do it is to blend private finance with some multilateral finance through the MDPs to adjust the risk profile. But just to put it in bigger perspective, various estimates of what's needed in terms of investment. If I average them out, it's around $3.5 trillion of resilient or sustainable infrastructure over the course of the next 3 decades. 3.5 per annum over the course of the next 3 decades. That's roughly twice the pace of current infrastructure investment, and about 70%, 3/4 of that effectively, will be in emerging and developing economies. So we have to create a system that drives investment in those regards, and through Scope 3 disclosure and incentives through carbon markets and through blended finance, we can do it.
Very good. We are here gathered to be part of the MAS FinTech Festival, and so we should talk about FinTech. So let me first ask Mark and then Ravi. We have at this festival literally tens of thousands of businesses in all sorts of areas who might play some role, either because they themselves are going to have to go through this process that you've talked about, or they may bring innovations to the table. So in which ways are you most excited about FinTech and the intersection of finance and technology playing a role in solving these problems? Mark, first you, then Ravi.
Sure. Well, one of the things that I get most excited about when I'm dealing with fintech is that I don't know what they're going to come up. You set out the problem, and they will come up with the solutions, and they'll come up with innovative ideas. The degree of innovation is truly astounding. We see it in the UK, we see it in Singapore, we see it around the world. And the important thing is to knit it together. But let me give you a few examples. So one of the things that we will need for a carbon offset market is real-time verification technologies, and that could be based off of LEO satellite technologies. In fact, low Earth orbit satellite technologies that are being put in place, and so that we know that the nature-based solution is there, that the offset is still there, and that will give confidence, and that will drive investment. That's one example. A second example, Ravi mentioned earlier, climate stress testing. The technology around climate stress testing, the forward scenario analysis and the sensitivities of that is new and emergent financial technology, as is, and this is my third example, ways to think about portfolio warming of pools of capital. So if I'm an asset manager, a pension fund, what's my contribution to global warming? Not what is my carbon footprint today, but given the companies I own and the assets I own, what's the trajectory for those assets? What am I doing, or what are they doing to help with the transition? Again, the important thing is the transition. And so over the course of the next few decades, if I held that portfolio and the world looked like my portfolio, where would we end up? That technology is being developed. There's a few big pools of capital, some large insurers who already do estimates of this. It can get a lot better through fintech. Last two quickly. One is around, we all know and benefit from the emergent e-commerce and other platforms that are being developed, and the fintech behind that, the payments technology that's being developed. A number of those payment companies, or some of the leading payment companies, are developing and blending net zero with the payment chain. So in other words, I'm a SME, I want to do the right thing. I go on a platform, I'm sitting in Ottawa, I want to sell into Singapore, but I want my client in Singapore to know that this is a net zero delivered product. How do I do it? I've got myself and 10 other people. Well, actually, there's a few companies that I can plug into now, fintech companies on the payment side, that will make that reality. Perhaps I should stop there, because Ravi's going to have a list of some pretty good ones, and I want to hear what he has to say. But that's some sense of the scale of the applications that are there, and I would underscore that I see the tip of the iceberg, and what's really exciting about it is there's a lot more that will be going on.
Ravi, hit us with some more examples. What are you excited about?
Well, no, it's just listening to Mark, and when Mark said, a problem at these fintech people, you're just amazed at what they come up with. And every year at the FinTech Festival, we have what we call the Accelerator Challenge, the FinTech Innovation Challenge, where we collate real problem statements, from financial institutions that want a solution, and then we put it out to the global community, and we get responses, from more than 60 or 80 countries. And it's just amazing, some of these solutions. If you're in your own market, you never get to see that range. And this year, in addition to pandemic risk management, we put out a challenge to solve problems that financial institutions have with respect to measuring climate risk, environmental risk management, and so on, and how to design good green finance solutions and products. And we put out the challenge. The submissions have come in. We've got 20 finalists. So I think we need to harness the innovative energy across the world to solve many of these problems. Actually, the problems are not so much in the technologies. Mark has listed a few, and I'm not going to add to that list. I mean, there are AI platforms that match, institutional investors with ESG business opportunities. We've seen a wealth management solution that incorporates climate change scenarios so that investors, as Mark said, can model their wealth projections and financial goals depending on what they think the extent of global warming or mitigation efforts might be. The real problem that we need to solve is availability and the quality of data. Because without data, a lot of these technologies are not going to work well. In fact, I would say ESG data is the foundation of green finance. And today, there are serious gaps in the data value chain, how this data is acquired. There's a lack of transparency. The quality varies a great deal. There's a lack of timeliness. You don't get real-time sense. And there's a lack of trust, actually, to share this data. So the first step is to solve the data problem and see how we can use technology to solve that, trusted and quality data. Mark's mentioned a few. We can use in IoT devices, big data, AI, and so on, to deploy on location to collect data in real time, and then push the data onto online cloud platforms for investors then to monitor the commitments of the investee companies in a real-time basis. And actually, if you can integrate these systems, Mark spoke about it at the corporate level, the waste management system in the company, the building management system. There is a lot of data there. And if we can integrate that data, send it via application programming interfaces, APIs, to collect and consolidate this data on electrical consumption, waste output, and so on, you get something that's more real time, and you reduce the reliance on corporate self-reporting. The other thing you need is external certification. You need the equivalent of strong rating agencies who provide us instincts about what's going on in the markets and credit risks and so on, although they failed miserably on occasion, but we still rely on them. And we need the equivalent of those kinds of service providers in this space, whom you can trust and who have the technologies and can employ these technologies for ensuring data provenance and verification. And there's also the potential, I think, to use blockchain technology. The example, if you're sending something across a supply chain from Ottawa to Singapore, how do I know the auditability and traceability along that chain in terms of whether the green credentials or sustainability credentials are good? So people are experimenting using distributed ledgers where their verification is through the blockchain, and then to also automate pricing, because you can change your pricing if the sustainability credentials are not in keeping with what you have contracted originally. So the possibilities are just tremendous. The sooner we can move to something close to real-time ESG, KPI performance and monitoring, the much more the trust will be for engaging in green financing. And on the MAS side, we are looking to create a technology platform that comprises a variety of fintech solutions to address some of these existing gaps. I must say it's still very experimental. The idea is to create a platform and bring people on board to experiment, exchange ideas, and see if we can make some moves along those lines.
Yeah. Can I just pick up on what James? Sorry, just one thing Ravi said, which around data. Obviously, in many respects, the road to Glasgow is paved with data, at least on the finance side, and the importance of having the ability to have a single company view, if you will, around sustainability and ESG data. And of course, we recognize that in finance, sometimes for some reasons, capital allocators, banks, insurers, others will use a rating, an external rating. Ravi referenced it, and I recognize that. But we also want the ability to go down into the data, including, very importantly, through the supply chain, the value chain, and make judgments based on that themselves in order to price transition, to support transition. And again, we're creating a bunch of new data for sustainability, for the purposes of sustainability, and we need to organize it in a way that those who really want to crunch through it can do it as efficiently as possible. Sorry.
No problem.
Let me just come back.
See, we've broken out a fireside chat here in our fireside chat.
There are probably three ways you can address the data issues. I think one is corporate self-disclosure. 2 is external certification and verification by players like rating agencies, experts in the field. And 3 is real-time technology monitoring, which doesn't depend on any of these. And I think today, I think the third is the most, probably the most reliable, but at this point, probably furthest from reality, which is why I think the focus has been correctly on disclosure, self-disclosure. Try to measure it as best as you can and be subject to investors and the market's scrutiny. And then to try to establish these sources of expertise, which can make these external verifications, even as we work on the technology side. So we're kind of looking at all 3 buckets. We think the third is the best, but it's probably going to take longer. And in the meantime, we probably have to depend on the first 2. I don't know if Mark has a perspective on this.
Well, I basically agree with what you're saying, Ravi, and I'm conscious that as with everything with climate, I'm looking at the clock. We have 4 minutes, and we overran James's last question, I think. So we better hand it back to our moderator here.
No, that's fine. This is meant to be a fireside chat, so the moderator encourages chatting. Mark, let me close this out with you, because as you say, we're running short of time. You've talked a lot about the road to Glasgow. Right back at the beginning, you talked about an agenda on risk management, but nestled within this agenda, there are some much more difficult things. Mandatory reporting standards, for instance, which people want to bring in. If you were, as opposed to merely the UN Special Envoy for Climate Action, if you were, global emperor for a day, which would be the things that you would really want to see happen coming out of Glasgow that are going to be the things that we should be looking out for? What are the kind of critical things you want to achieve in this area?
Yes. Okay. So you rightly started with mandatory disclosure, and I think one of the very important things that did happen the same day as that speech was the Chancellor of the Exchequer in the UK announced that the UK will have mandatory climate disclosure, and it's a phased approach, but it rolls in starting in January of next year and cascades through, and that will be a big focus. It'll be a focus in the G7, which the UK is chairing. It'll be a focus in the G20, which Italy is chairing, and I would add, for those who aren't following these things as closely, the UK is hosting COP26 in Glasgow in partnership with Italy, so there's very much alignment there. Second thing we would like to see is as many central banks and supervisors following the lead of the MAS and the Bank of England in launching or moving towards these climate stress tests, because, to be clear, these are not gotcha stress tests. This is a symbiotic process with the financial sector, where the regulators and the risk practitioners in the financial sector are getting better at managing these types of risks, because quite frankly they haven't been managed in the past. There's no point crying over spilled, that's water under the bridge. The point is to move forward. Thirdly, we really want to see this carbon market develop, this carbon offset market. It's a necessary market. The private sector needs it. It's focused on getting it, but we need to develop, and if it's going to work, it is going to very quickly be a global market, and that's essential. And then lastly, the people who invest our money, the people who are watching their money as well, need to be able to answer the question in a comprehensive and accurate way, comprehensible and accurate way. Is it helping to solve climate change? Is it on the right side of climate history, or is it part of the problem? And we don't, a simple ESG type badge is not going to answer that question. We need richer taxonomies. We need a way of channeling that in potentially to something as simple as this portfolio is 1.5 degree warming. In other words, it's Paris aligned. It's solving the problem, and this other one isn't. And so we need the best in finance to work on that and help come up with that answer to how to do it.
Very good, excellent. Well, I emerge out of this more optimistic than I entered, which is a good thing. So thank you very much to both of you for taking time out of your days to do this. We have talked about the future of finance being green. and I think we've covered an awful lot of interesting ground. So Mark, Ravi, many thanks, and I hope you enjoy the rest of the FinTech Festival.
Will do. Thank you. Thank you very much, Dave. Thank you, Ravi. Always a pleasure.